Today, February 1st, 2018, our finance minister have placed the budget, and as a civil service aspirant and other students, those students who are preparing for other competitive exams, you know that budget of that particular year is very important, and especially for civil service aspirants. Okay, so this budget 2018-19 we will be discussing in a series of videos, so that you will be able to relate each sessions with your respective topic, and you can update it also. Okay, so in today's session we are going to discuss about the taxation, major taxation proposals of this year's budget, and those proposals which is important from your examination point of view. Okay, so basically this session is mainly aimed at those students who are preparing for civil services prelims 2018. So in this session, so you all might aware that okay, budget is the most important financial statement, annual financial statement of the union government. So in this budget, or in this annual financial statement, the government proposes major taxes as part of its revenue mobilization or as part of its resource mobilization, as well as it will announce major expenditures in the form of what is in the coming year, in the coming 2018-19, what all the government aims, government's main expenditure. So as a common man as well as a civil service aspirant, you need to know the receipt part of the budget, the major receipt part of the budget, as well as the major expenditure part of the budget. Okay, so in your conventional class on budget, you might have studied about revenue expenditure, you might have studied about capital expenditure, you might have studied about revenue receipts, capital receipts. Okay, all these things are very important, so you will relate all those things in the present. So what you need to do is that you relate what all things you studied under the budget concept and link it to the 2018-19 budget. So what you can do is that under your revenue receipts, all the taxes the government collect will go to revenue receipts under the heading called tax revenue. So today we'll discuss the major proposals from the government in relation to this tax revenue. Okay, so I have classified from your for your easy understanding that the major taxes into direct tax and indirect tax. So you are very clear with that. You need to be very clear with the concept of what is a direct tax and indirect tax. Okay, so we'll start with the before starting with this taxation proposal, two very important things you need to know about this budget 2018-19. One is that this is the first budget after implementation of GST. Every newspaper have highlighted this point, so it's very important for you. So budget 2018-19 is the first budget. This is the first budget after the implementation of GST. This GST was implemented from 1st July 2017. Okay, so after the implementation of GST, this is the first full budget. 2018 budget is very important for that reason. Second reason is that budget 2018-19, this is the current government's fifth and last full budget. This is current government fifth budget as well as the last full budget. Now next year after this, the government will not be able to come up with the full budget, a new government, because the 5 year will be completed. There will be only an interim budget. So this is the present government's last, and mean the sense of the last full budget. So that's another point you need to just note down. Okay, now we'll go to the major taxation proposals which is important from your examination point of view. So under direct tax, so the major direct tax, UPSC used to ask questions like this. Okay, which of the following is a direct tax, which of the following is an indirect tax? Already UPSC have asked this. Okay, which of the following is a direct tax? So under the major direct tax, so the corporate tax as well as personal income tax are the two major direct taxes of the union government. So we'll see that whether any changes have happened in relation to the corporate tax. So the government have made a proposal in relation to the corporate tax that to those companies which is having an annual turnover of 250 crore. So companies, so it's basically small companies, okay. Companies with the annual turnover of 250 crore in the financial year. So in the 2016-17 financial year, those companies with the annual turnover of 250 crore, for them from this 2018-19 onwards, their tax have been cut to 25%. So their new tax is 25%. For those companies with the turnover of 250 crore in this particular financial year, for them the corporate tax has been cut to 25%. So the large companies still they have to come in, they have to continue the, there is no change to them. Okay, so this is the changes this budget have announced in relation to corporate tax. So UPSC, this two things are very important for you. How much the cut tax, new tax is 25%. To those, so which all companies will benefit this tax cut? That is those companies with an annual turnover of 250 crore, and the turnover is calculated on which year? That is 2016-17 financial year. So this is one point from your examination point of view regarding corporate tax changes made in this year's budget, that is in 2018-19 budget. Second is regarding the personal income tax. So this was everywhere, like the finance minister have not made any changes to the personal income tax. There is no changes. So the income tax slab remained. Regarding the tax slab, there is no changes. So in that you can say there are some deductions has been given, but in the tax slab there is no change. And this point is very important. In the income tax slab there is no change. So you need to keep in mind that. So what is the present personal income tax slab? Just have an idea that the personal income tax slab is up to 2.5 lakh. The tax slab is for those who are having annual income up to 2.5 lakh, for them tax is nil. And then from 2.5 lakh to 5 lakh, the income, those who are having an annual income between 2.5 lakh to 5 lakh, for them the tax is 5%, which was reduced by the government in the previous budget. And those who are having income between 5 lakh to 10 lakh, it is 20%. So don't get, so presently one important point you need to note down is that in the personal income tax slab there is no 10% slab. 10% slab was changed last budget. Okay, so we have 5% slab, then after 5% slab, next slab is 20%. That is, people who are having an income between 5 lakh to 10 lakh, they have to pay 20% tax. Then 10 lakh and above, the personal income tax is 30%. Okay, then the last budget, the government have announced a surcharge. Okay, see, as a new surcharge was announced in the last budget. So this surcharge is retained. Okay, so now the people who are having, along with this 30% tax, people who are having an income of between, in this range, 50 lakh to 1 crore, along with this 30% tax, they have to pay an additional 10% surcharge. So this was introduced in the last budget. Before that, there is a people with an income of 1 crore and above, that has been 15% surcharge is there, plus along with this 30% income tax, personal income tax. So just have an idea, there is no changes in the surcharge as well as in the income tax slab. There is no change in the personal income tax. So that it's the main point, because the budget said that there is no change in the income tax slab. So that point you note down. But very important thing, one important changes happened in relation to education cess. Okay, so the government along with this have imposed education cess both on corporate tax as well as on personal income tax. So there was education cess on corporate tax as well as on personal income tax. So mainly the amount collected under the, so it was 3%. So the education cess earlier was 3%. The 2% of the education cess will be used for primary health, primary education. Remaining 1% will be used for secondary and higher education. So this education cess was imposed on this direct tax, that is mainly this corporate tax as well as the personal income tax. In this year's budget, this is very important for you. this year's budget have increased this education cess from 3% to 4%. This is very important, 3%. So, and renamed this education cess as health and education cess. So, this health and education cess is imposed on both corporate tax as well as on personal income tax. So, this additional 1% the government is expecting in 2018-19. In 2018-19, the government is expecting that this additional 1% cess will contribute, the government is expecting to collect around 11,000 crore, and this additional 1% cess, that is 11,000 crore, will be used for health program. So this year the government have announced a very important health initiative, what is called as Bharat Ayushman program. The major funding is from this 1% additional cess, that is health cess imposed on corporate tax and personal income tax. That says this 11,000 crore which the government will receive from this 1% increase to the education cess will be used for this Bharat Ayushman program. So Bharat Ayushman program is a very important current affair for you. We will discuss in detail. There are two major initiatives under this program. One of that initiative is National Health Protection Scheme, which is this year's a very important scheme, a health insurance scheme with a health insurance schemes worth 5 lakh, and it is basically aimed to cover 10 crore poor families. So with this additional cess, health cess, the government is mainly using that for this National Health Protection Scheme. Mainly it's a health insurance scheme. So regarding this National Health Protection Scheme and Bharat Ayushman program, we will study in we'll go in detail. That's because it's a very important initiative both from your prelims as well as mains point of view. So just have an idea, this education cess have been increased from 3% to 4%, and the cess is now called as health and education cess. This extra 1% will be used for this Bharat Ayushman program, mainly towards this National Health Protection Scheme. So this is regarding this education cess, or now it is called as health and education cess. Now the third direct tax, which is in news, which is a very important budget announcement, that in relation to capital gains tax. So already before the budget itself, we have discussed in our capital market session that the government have a proposal to introduce long-term capital gains tax on equities, on share market. So this year budget have brought back the long-term capital gains tax on equities, on shares. Okay, so this is a very important. So this has been considered. We have to wait and watch. Okay, how this announcement will have on the capital market, especially the stock exchanges. Already the stock exchanges, I think, like both the Sensex and Nifty today have taken this proposal they have ended in means there is a decrease in both the major indexes, mainly because of this proposal of this long-term capital gains tax on equities. So what is important for you? Okay, already the concept of capital gain is important. Already UPSC have asked this question. Now you need to know what is the interest rate on this long-term capital gains tax on equities. The new tax, long-term capital gains tax on equity, is 10%. So the tax rate is very important for you. Now what is the threshold limit? Okay, so if anyone who is getting a capital gain of 1 lakh and above, so this long-term capital gains tax is imposed on a taxable profit if it is 1 lakh and above. So it's a very small amount. So if the capital gain is 1 lakh and above, naturally this long-term capital gains tax 10% will be imposed on it. So you need to understand that what is this long-term, how long-term capital gain is calculated on securities. Basically, if it is 1 year and above. So before this budget, long-term capital gains tax on equities was 0. We were having only short-term capital gains tax, but from today onwards, that is from February 1st onwards, there will be a long-term capital gains tax on equities at 10%, and this tax is imposed on if the taxable profits is above 1 lakh and above, 1 lakh and above. And another criticism about this proposal of capital long-term capital gains tax is that it is without indexation. So indexation or the inflationary impact will not be considered while calculating long-term capital gains tax on equities. So when you consider the long-term capital gains tax on it's like for example on real estate or on gold, there is indexation is there. But in this equities long-term capital gains tax announced today on equities, there is no indexation. So inflationary consideration will not be considered while calculating long-term capital gains tax. This is another point. So threshold limit is important for you, that is 1 lakh. Tax rate is important, that is 10%. So this long-term capital gains tax is without indexation. So that is another key thing. And the fourth point about this new long-term capital gains tax is that is a grandfathering provision is being provided for this long-term capital gain, in the sense that this is applicable only from 1st February 2018 onwards. So up to January, for 31st January 2018, so if you have purchased a share before 31st January and before, this tax will not be applicable. So already this grandfathering clause we have studied under when we have studied this India-Mauritius double taxation avoidance agreement. Okay, so grandfathering is nothing but, okay, grandfathering means that, okay, from where it is imposed, from there only that particular tax will be applicable. Before that it will not be applicable. So it is not applicable to those investment on equities till 31st January. So that's why the market is not that much affected, since grandfathering provision have been provided. Investment up to 31st January grandfathering, so this will not be applicable. This new long-term capital gains will not be applicable. This long-term capital gain tax will be applicable only from the investment made from 1st February 2018. So what do you mean by grandfathering? So these 4 points are very important under capital gains tax. So one more point you can note down: capital gains tax is a direct tax. Now in relation to the short-term capital gains tax, just have an idea. It was 15% and there is no change in relation to short-term capital gains tax. So now onwards, that is from today onwards, that is on 1st February 2018 onwards, we will be having a short-term capital gains tax of 15% on equities, as well as a long-term capital gain tax of 10% on equities. So we have now short-term capital gains tax and long-term capital gains tax on equities. So that is very important for your prelims. So that's why I have stressed it this. So note down. Now when it comes to the indirect tax, now regarding the indirect tax, you know that the government's 2 major indirect tax, that is union excise duty as well as service tax, is now being merged, or it's now is not there. Now it has been merged with this GST. So union governments, now the major indirect tax is goods and service tax. So goods and service tax is a very important important tax for indirect tax for the union government, and it is also a very important topic for your prelims as well as mains. So in regarding this GST, I told you this is the first budget after the implementation of GST. Already in this, so in the last financial year, there is only 9 months of GST collection is there. So the government is expecting that the union government will get somewhere around 4.45 lakh crore under GST, and in 2018-19 it is expecting to collect more than 7 lakh crore under GST for the union government. So it's all expectations. Okay, so just have an idea what is GST. We will discuss in detail what is GST later in the coming classes. Now another, so 2 major tax, indirect tax, that is union excise duty and service tax, is merged with GST. And in relation to customs duties, so customs duties, keep very important point. This is a one important indirect tax, union government indirect tax, which is not included under GST, which is not, additional customs duty has been included but not the customs duty. So customs duty is still there, which is a union indirect tax, union government's indirect tax. Now regarding this customs duty, keep a note that, okay, to many sectors, including automobiles, then food processing, then mobile phone, TV, the government have increased the customs duty. So this budget for one reason have increased customs duty to many products. Okay, so basically what the finance minister have said in regarding the increase in the customs duty is that the government want to increase the domestic value addition. It means that the government want to increase domestic manufacturing instead of depending on imports. As well as the government, this by boosting domestic manufacturing, it will help in this Make in India initiative also. So one important thing regarding the custom duty is that the most important mainly used product like mobile phone and TVs, the custom duty have been increased from 15% to 20%. There are other components also that's not that much important from your examination point of view. So just have an idea, this year there have been many products the government have increased the customs duty mainly to mobile phones. Okay, so another important point to be noted under custom duty is that the government have introduced a new surcharge, what is called as social welfare surcharge, and on customs duties. So there is a new surcharge on customs duties called as social welfare surcharge, and that surcharge is 10% on customs duties, and the amount the government collects from the social welfare surcharge will be used for social welfare schemes. Okay, so there will be more on the social welfare surcharge as well as this health and education cess. Read it. I already shared articles in our Telegram group. I am again repeating. You have a plenty of information, relevant information regarding your economy. Articles from newspaper articles as well as economic survey as well as most important current affair has been shared in our economy Telegram group. So the economy Telegram group link is shared with this video. Those who have not joined it, please join it. So this will help you, this Telegram link and the articles shared in that will help you to understand the most important area as well as relevant area for your preparation, civil service preparation. So this so be very clear. Okay, social welfare surcharge is a new surcharge announced in this year's budget, and it is imposed on customs duty, and the rate is 10%. The amount will be used for the surcharge fund will be used for social welfare schemes. Now I told you this budget is the first budget after the implementation of GST. So the Central Board of Customs and Central Board of Indirect Taxes and Central Board of this Excise Duties and Customs. Earlier we had a Central Board of Excise Duty and Customs. Now we don't have excise duty. We have instead of that GST. So the Central Board of Excise Duty and Customs have now been renamed. This budget have renamed the Central Board of Excise Duty and Customs to Central Board of Indirect Taxes and Customs. So these are the important relevant point from your this year's budget for this year's budget taxation proposal. Okay, so today's session is only on this year's budget taxation proposal. So we will have many sessions mainly on the expenditure side. There have been major proposal on agriculture. So we will have a separate session on how tax have affected the agriculture sector. Basically this budget is considered as a farmer friendly budget. So many initiatives this budget have taken, especially in relation to MSP and other things. So then we will separately deal with the budget proposals on fiscal deficit, on disinvestment, on health, on education and other important infrastructure sector. So we will have a series of budget related budget 2018-19 session. So that will help you to learn the important provisions of this budget from your examination point of view. So we'll come with the next part of budget 2018-19 tomorrow. So today you can note down all these things. You can also refer the articles which have been shared in our Telegram group. So read those articles also. Along with that, just note down the most important point. All the best for your coming prelims exam. Thank you.